I'm Scott Starratt with Starratt Wealth Management. So, what a difference a month makes. We had 3 months of pretty negative numbers in the stock markets and the bond markets. The stock markets, because obviously the stocks went down, the bond markets, because for October, September, and August, we saw increasing interest rates. Basically, all that completely reversed in November and had one of the best Novembers in all time, really. And so a lot of this was because of the fear of the lack of fear, I should say, about the market going forward. There seems to have been, with some of the data coming out on inflation, jobs, and some of the comments from the members of the Federal Reserve Board down in the United States, and quite honestly, the Bank of Canada in Canada, there is a talk that they're done increasing interest rates. And so the market took that as a time to rejoice, and we saw very strong equity, bond, basically every market except some commodities during the month of November. So it was a really nice surprise, I think, for a lot of people. We were fortunate, if you recall, that we decided to significantly add to our equity portfolio at the end of October. We decided to use Canadian banks and small and mid-cap stocks, both of which had been down 23 and 33% respectively from their all-time highs in 2022. So we decided to use that as a way to get more involved in the market. We still have money available in case the stock market were to drop some more, but we're quite happy with the start, obviously with the month of November and the start of December. Interestingly, though, it's not all healthy underneath. If you were to look at the market year to date, you would see that the S&P 500, which I spoke about last month, the top 500 stocks in the United States. But I have some statistics to the end of November that I thought were quite interesting. The first thing was the S&P 7. So these are the top stocks in the S&P 500. Companies like Apple, Amazon, etc. They're up 71% year to date, which is obviously a huge number. The S&P 500 to November 26 was up about 19%. But here's the interesting part to me, is that the S&P 493, so basically the remaining stocks, once you take up the top 7, were only up 6% year to date. So a big difference between what we saw happen in the overall market by the index and what actually is happening with the majority of stocks. And then, like I said, add into that there are sectors in the economy, such as small and mid caps and financials, that have really gotten hit. So what does that mean? Well, 71%, around 71% of the time, December is a positive month. On average, it's up 1.9%. That being said, math is math, and that would imply that there's a 29% chance that the market will be down in December. So although I don't think that you could say, well, December we're going to end really well, I think we are optimistic that we'll have a solid December. That being said, anything can happen, as we all know and as we've all seen over the last 3 or 4 years. But one of the things we still continue to be focused on is ensuring that the volatility or the bumpiness in the portfolio is not very high. We are balanced between bonds that are paying some really nice interest rates, some defense investments, and of course the stock investments. So even though we may be at the highest percentage of stocks and portfolios for quite some time, the reality is that is a very low amount compared to the overall market and compared to what some would consider to be a benchmark portfolio. So going into the end of the year, we are optimistic, like I said, but cautious. We do feel that there can be some volatility, and we are in a position to take advantage of that volatility if we get some. I want to take this opportunity to thank you all who are clients for having allowed us to and trust us to helping you manage your money so that you could achieve your goals. We are very optimistic for next year, and we will be ramping up, focusing on planning and focusing on a few other things that we think are important to ensure that you're comfortable with all the hard work and all the hard savings you've entrusted with us. Everybody here at Starratt Wealth Management and Canaccord Genuity as a whole really do hope that the holidays are positive for you, and really looking forward to talking to you all either before the end of the year or early next year as we start the 2024 activities. If you do have any questions, please don't hesitate to reach out to Jim, myself, Rimshaw, or Angela. We're all very happy to answer your questions, or to talk to you about your portfolio as well. Of course, if you do know family members, friends, acquaintances that maybe have had a tough last couple of years in the markets and might appreciate the kind of style that we bring to the table, please do reach out, as we're more than happy to have a coffee or sit down with them to discuss their personal situation.